Hey, what's up, guys? Welcome to the Texas Mortgage Boss Podcast. My name is James J. And today we are going to talk about what you should do before interest rates rise. Let me say that again. What you should do before interest rates rise. Let's get started. Alrighty, so this is something that has come up several times over the last few weeks personally, where I get a lot of questions about interest rates all the time, but specifically this last few weeks, because a lot of the news outlets will report that, hey, interest rates are projected to go up, towards the end of the year, maybe into 2022, which is not far. We're not far from 2022 at this point, but I wanted to address this because I think this is something really important to look at. I do get a lot of people that will say, hey, I'm going to wait. All right, I'm going to wait until next year. Okay. They want to wait till next year because they think the market's going to fall, it's going to crash. And so we're going to kind of get into the meat and bones of the market as it is right now, and then what you can expect for the remainder of this year into next year. And maybe this will change your thought pattern as it relates to waiting, as it relates to maybe even considering a refinance. So let's get into the slides here real quick. So what I want to do is go through a few things with you, because selling or moving up is one of those things that is very, very prevalent right now, meaning a lot of people are on the fence about this. A lot of people want to sell, but at the same time, if they sell, where are they going to go buy, right? That is the thing. Where am I going? How am I going to sell my home and then turn around and buy a home where I'm buying at the top of the market as well? So yeah, you're selling at the top, but you're also buying at the top. So one of the things to consider right now, especially with all the pandemic aftermath, essentially, meaning a lot of people are now working at home. So now people have kind of redefined what they, what they need in their homes. A lot of people are saying, I don't need this much home, or hey, maybe I need more of a home. So either way, with the rates being still extremely low right now, this is a good opportunity to take advantage of if you're thinking of selling and moving up, or just downsizing. It's a really good opportunity to take advantage of it. You can save yourself a lot of money if you decide, I'm not going to buy right now. I'm going to stay put. Maybe a refinance is the right move for you. The rates, if you had an interest rate, or you got a mortgage, 5, 6, 7 years ago, for example, your rate back then versus what it is now, there may be a significant difference between what we can get you now versus what you got several years ago, which could obviously save you money on your monthly payment, save you interest, and just overall financially, it can improve your financial well-being as of right now. So something to definitely consider if you say, I don't really want to move right now because I'm not going to be able to find a place to live. Now, I think the market's slowing down just a little bit, at least in the area where we're at. But definitely something to consider if you say, I don't want to buy right now because I don't think I'm going to be able to find a house. Maybe a refinance is the best way to go. Now let's take a look at this right here. Mortgage rates by the decade. I love looking at historical numbers because this really helps put things in perspective. Interest rates, the 80s. I have a lot of people that I personally know who own homes back in the 80s. I am not one of those people, but I know a lot of people that tell me, oh my gosh, people are complaining about the interest rates right now being in the low 3s, 3.5, if they start to go up. But we were paying double digits back in the 80s, right? So you can kind of see the progression from the 80s into the 90s, 2000s, when I bought my first home, and my interest rate was in the 6s back then. I bought another home in 2006. My interest rate is probably around 6.5 back then. And I was very excited to have that rate. So as you look at rates today, you can see we're now close to 3 as far as an average interest rate. 3, everything is obviously credit dependent, but we're hovering in that low 3% range again. And how long that's going to stay there, who knows? No one really knows. Even the people that project interest rates for a living, it's kind of like weathermen, right? Sometimes they get it right, sometimes they don't. We don't know what might happen in the marketplace as well. Things happen that cause interest rates to drive either up or down. So we got to keep that in mind as well. But I love looking at historical numbers because this really helps put things into perspective. So let's look at buying purchasing power, because I think this is another thing that really dictates, or excuse me, really indicates the power of the interest rate on your monthly payment. So if you look at a $300,000 home, the interest rate, just look at 3%. If we're at 3%, and this is just principal and interest only, all right? Just principal and interest, P&I. So $1,265, right? That's at a 3% rate. As rates start to increase, you've got a little bump here at 3.25, 3.5, 3.75. Now, you may say, oh, from 3.75 to 3% monthly, okay, that's not a lot of money, right? 135 bucks, 34 bucks. But when you take that number and multiply it over the life of the loan to say 30 years, now you're talking several thousands of dollars when you look at it from that perspective. So everybody is going to have to look at their own situation and decide, okay, is this a home that I'm going to keep long term? Or is this maybe just something that I'm going to stay in for a few years and then move on? That ultimately decides, or helps clients decide whether or not it makes sense to maybe pay points or buy down a rate if they choose to. But the interest rate over time, you are going to save significantly when you look at a 3% interest rate versus one that's at 3.75 or 4% if we get back to that, which eventually we're probably going to get back to the 4s. I don't know when. I hope it's no time soon, but at some point it's probably going to happen. Just my 2 cents on what's going to happen with interest rates. So let's just kind of break this down. If we look at a $300,000 home, as we just looked at, as you can see, obviously when the mortgage rates go up, so does your monthly payment. So even a little increase, even from 3.25 to 3.5%, you're talking a $41 difference just between 3.25 to 3.5. Again, take that difference, multiply that over 30 years. You're talking about a lot of money that you're saving by taking advantage of the rates as they are right now. The other thing is this: as the interest rates rise, your buying power goes down. So what you may have to consider, if you say, I'm going to wait to get into the market, well, if you wait till next year, interest rates go up, well, now your buying power is going down. So it's like, does it make sense to wait? Does it? It may. Does it make sense? You have to look at that and see if it really makes sense for you to wait. In my opinion, the interest rate, because it plays such an important factor in the monthly payments, I think it's wise to take advantage of it right now, right? While you can get a rate that's relatively still low and be able to get more house and still have that monthly payment that you may be considering. So just something to think about there. But again, if you're considering downsizing, moving up to a home, or you just say, you know what, I'm going to refinance, take advantage of the market right now, right? We're in a really, really good position. We just are. Rates are low. The market is slowing down just a little bit. And when I say that, what I mean is the craziness of offers being, or homes being snatched up in a matter of hours with you've got 10, 20 multiple offer situations. It's slowing down just a little bit. That's a good thing. It's a good thing, because what happens is the people that were not able to get a home 2, 3, 4 months ago because it was such a crazy market and they could not afford to offer a seller 30, 40, grand over asking, it's slowing down just a little. So that means more opportunities for other people to be able to get in the market. And remember, the other thing is with those student loan changes with FHA a month ago, we now have more people that are in the market because now more people can qualify because FHA changed the rule as it relates to school loans. So I did a video about that. Go take a look at it if you got a question about the school loan change and what happened with FHA. It's a good thing. It did allow more people to qualify for homes. So that's a completely different video that we did. But because of that, you now have more people in the market. So that is it for today's video. This is what I want you to do. I want you to go to YouTube, subscribe, go to Spotify, subscribe, go to iTunes, subscribe, like, and share. I will continue to put out videos. Look, I do this because I enjoy it. I want to help people. Hopefully it's helping. Give me some feedback in the comments, and I'll see you guys next week on another Facebook Live. See you guys next week.